Welcome to Money Minds. Have you ever wondered how the stock market works? Today, we're going to unravel that mystery. Think of the stock market as a colossal global supermarket, except instead of buying groceries, you're purchasing bits and pieces of companies. These pieces are known as securities, which come in various forms, like stocks and bonds. Just as a supermarket has a myriad of items to choose from, the stock market offers a vast array of securities. Companies, both small startups and massive multinational corporations, come to this market to raise money. They do this by selling shares of their business in a process called issuing stock. Once these shares are up for grabs, anyone from your next-door neighbor to a seasoned Wall Street investor can buy them. So, why would anyone want to buy these shares? Well, when you purchase a share, you essentially own a small part of that company. As the company grows and prospers, so does the value of your share. This increase in value is known as capital gains. But that's not all. Some companies also pay out dividends, which are a portion of the company's profits distributed to shareholders. In other words, as an investor, you can earn money in two ways. Through capital gains when you sell your shares at a higher price than you bought them, and it's important to note that the stock market isn't a free-for-all. It's overseen by regulatory bodies like the Securities and Exchange Commission in the United States, which ensure the market operates fairly and transparently. So, while there's always a degree of risk involved, there are also rules in place to protect investors. The stock market also has its own rhythm, operating Monday to Friday during specific trading hours. However, some markets offer extended hours, allowing for trading before the opening bell and after the closing bell. In essence, the stock market is a bustling marketplace of financial transactions, offering opportunities for companies to raise capital and for individuals to grow their wealth. But how does it all work? Stay tuned as we delve deeper into the fascinating mechanics of the stock market. To ensure everything runs smoothly, the Securities and Exchange Commission plays a crucial role. Now you might be wondering, what is the Securities and Exchange Commission, or SEC as it's commonly referred to? Well, the SEC is a federal agency that was created in the wake of the Great Depression. Its primary task? To regulate the U.S. stock market and ensure investor protection and market integrity. Think of it as a referee in a soccer match, ensuring all players adhere to the rules of the game. The SEC has a similar function, but in the financial arena. It establishes and enforces rules for public companies and brokers, aiming to prevent fraud and deceit. One of the SEC's significant roles is to regulate the information that companies disclose to the public. This includes everything from financial reports to details about the company's operations and management. The idea is to make sure that potential investors have all the information they need to make informed decisions. Another critical role of the SEC is to monitor and regulate trading activities. This involves overseeing major securities exchanges, such as the New York Stock Exchange and the Nasdaq. It also includes keeping an eye on other players in the game, like brokers, dealers, and investment advisors. But the SEC's role doesn't stop at regulation. It also has a hand in promoting fair dealing, encouraging the disclosure of important market-related information, and protecting against fraud. Remember, the stock market can be a challenging playing field filled with complex transactions and high stakes. But with the SEC, we have a regulatory body that's working to ensure that the market operates in a fair and orderly manner. So, while the stock market may seem like a free-for-all, there are rules and regulations in place to keep things fair and orderly. You may have heard of the S&P 500 or the Dow Jones, but what exactly are they? These are what we call stock market indexes, and they play a pivotal role in gauging the financial pulse of the market. Let's break it down. A stock market index is a measurement of a portion of the stock market. It's computed from the prices of selected stocks, typically a weighted average. This means that more significant companies have a more substantial impact on the index's performance. Take the S&P 500, for instance. It's one of the most widely recognized indexes and represents the stock performance of 500 of the largest companies listed on the U.S. Stock Exchange. As such, it provides a broad snapshot of the U.S. equity market. If the S&P 500 is up, it typically means U.S. stocks in general have increased in value. On the other hand, the Dow Jones Industrial Average, or simply the Dow, is another key index. It's made up of 30 significant companies traded on the New York Stock Exchange and the Nasdaq. Although it includes fewer stocks, the Dow Jones has been around since 1896, making it one of the oldest and most watched indexes globally. But why do these indexes matter? Well, they provide a general sense of how the market is performing. If you hear that the market is up, it usually means that the major indexes have increased in value. Conversely, if the market is down, it signifies that these indexes have decreased in value. Moreover, these indexes serve as benchmarks for investors. They help investors compare their investments' performance to the broader market, helping them make informed decisions. In a nutshell, stock market indexes are like thermometers for the financial market. They help us understand the market's temperature, whether it's heating up, cooling down, or maintaining a steady climate. So, market indexes provide a snapshot of the market's overall health. They are tools that help us navigate the ever-fluctuating financial seas, guiding us towards informed investment decisions. Interested in dipping your toes into the stock market? Well, it's not as daunting as you might think. Let's break it down and get you started on your investment journey. First off, start with understanding your financial goals and risk tolerance. Are you investing for long-term growth, or are you seeking regular income through dividends? Are you comfortable with high-risk investments that might yield higher returns, or would you prefer to play it safe? Once you've got your goals and risk level figured out, it's time to do your homework. Research is key in the world of investing. Get to know the companies you're interested in, understand their business model, and stay updated on news that might impact their stock prices. There are plenty of resources available online to help you with this. Next, you'll need to open a brokerage account. This is the platform through which you'll buy and sell stocks. There are many online brokerages out there, each with its own set of features and fees. Choose one that suits your needs and budget. Once your brokerage account is set up, you're ready to start investing. But hold on, it's not about jumping in and buying stocks left and right. Remember, this is about strategic investing. Diversify your portfolio by investing in a mix of stocks from different sectors. This helps to balance the risk, and last but not least, patience is key. Stock market investing is not a get-rich-quick scheme. It's about long-term growth. The stock market has historically offered average annual returns of around 10%. But remember, this is an average. Some years will be up, some years will be down. Stay patient, stay invested, and let the power of compounding do its magic. And there you have it, a basic guide on how to start investing in the stock market. Remember, the earlier you start, the more time your investments have to grow. So, why wait? Start your investment journey today. With the right approach, the stock market can be your ticket to financial growth. So, we've covered quite a bit about the stock market. We dived into the deep end and broke down the concept of the stock market. It's a bustling financial platform, a hub where securities like stocks and bonds are bought and sold. We learned how the stock market provides access to investment assets and plays a vital role in determining fair prices for public companies. It's a place where companies raise capital by selling shares, and investors benefit through capital gains and dividends. Then we shifted gears to the Securities and Exchange Commission, the watchdog of the stock market. This regulatory body ensures investor protection and maintains market integrity. It's the SEC's job to keep the market fair and transparent, safeguarding the interests of investors and promoting the development of the market. We also explored the world of stock market indexes. These indexes, like the S&P 500 and the Dow Jones, track stock performance. They give us a snapshot of the market's overall health and direction. They're like the pulse of the market, offering valuable insights to both new and seasoned investors. And of course, we didn't just leave you with knowledge, we showed you how to put it to use. We walked you through the steps to start investing in the stock market. It's straightforward, and an early start can lead to long-term growth and dividends. Remember, investing in the stock market offers historical average annual returns of around 10%. The stock market might seem complex, but with a bit of knowledge and understanding, you can navigate it with confidence. So, whether you're looking to dip your toes or dive headfirst into the world of investing, remember that knowledge is your best tool. Let's keep learning, keep investing, and continue to demystify the stock market together. We hope you found this video informative and helpful. Our goal is to break down complex financial concepts and make them accessible to everyone. Understanding the stock market is just the first step in your journey towards financial literacy and independence. But we're here with you every step of the way. If you've enjoyed this video and want to keep learning, don't forget to hit the subscribe button. By subscribing, you'll become part of a community that's committed to empowering its members with knowledge. You'll also be the first to know when we release new videos on various financial topics. Your support keeps us going, and we are grateful for every like, share, and subscription. So, thank you for taking the time to watch and learn with us today. Remember, knowledge is power, and every bit you learn puts you one step closer to achieving your financial goals. So, until our next video, keep learning, keep investing, and keep growing. Don't forget to hit that subscribe button and join us on this journey of learning. Until next time, happy investing.